Hey guys, Don Durrett, Gold Stock Data with your video of the week. So I've decided to, we're, I've finished putting links and videos in each one. So I've decided to work from the top down to do videos, so get a video of all of them. So today we're going to do 1911 and Osgold. Um, Before we start with 1911, I wanted to show you a couple things. The first was in the forum. I created a must-own list. Nah, not must-own, high conviction stocks, which is similar to the model portfolio, but you can come in. It's on the top 25 newsletter favorites thread. Um, you can find it. It's on the dates today. If you click on this link, it'll open the list up. So this one's going to have performance as well. So this website, this Gold Silver AI, you can create your own free portfolio, but they did it for me. So this has 42 positions. So the model portfolio has 80, so it's about half. Um, so I have 160. I cut that down to 80 in my favorites list. Now I've cut it down to 40 in my kind of must-own list. I wish these were alphabetical. Oh, there we go. Click on it, it's alphabetical. So you can see these 40 names. I think all 40 of these are um, in the newsletter favorites. There might be some that are a little higher risk that might not be in there. I'm not sure if Denarius is in there. Going down the list, Norsemont and Denarius. Everything else seems like it is there. We go back over here. Daenerys is not in here. And Norsemont is. So Daenerys is the only one. Serato, Serato's not on here either. Serato and Daenerys, let's just say that, so this portfolio is, I've kind of focused on high quality. So Daenerys and Serato, well, I consider them kind of must-own stocks. I take more risk. So this model portfolio, I consider this model portfolio more for high net worth. So I try not to put too many really high risk stocks. I think Daenerys and Serato are should do well, but a little bit. I didn't put them in here. I thought maybe the risk was a little high. You can see I'm trying to focus on quality here. So the other thing I wanted to show you, in addition to that, was if we can go to my news, into my YouTube channel. I created my channel. So my channel is Don Durrett. So if you click on videos, it'll have them. So I created one 2 weeks, 3 weeks ago. So I created one this week. So this is the 10 bagger list. So there's 29. And then I mentioned 10 more that aren't on this list. So about 40 10 baggers, a little bit more high risk, so you can review that. Okay, so let's start with 1911. Since 1911 gold, this is on the 10 bagger list, so I just went over it so, in the video. But I'm going to go over it a little bit more extensive here. I only in that video, there's 29 stocks. I only do about 2 minutes each, but this one we're going to do about 10, 15 minutes each. So 1911, this is a development stock, near term, nah, not quite near term producer. They're getting closer though. I think Q1 2027, so they're not that far out from being a near term producer. This will change. Um, CapEx is only about $30 million to restart the mine. They should restart it, I don't know, around 60,000 ounces, but I expect it to ramp up. They can expand the mill. I'm expecting this to be a 100,000 ounce a year project property. They have about 1.5 million ounces between their two deposits. I think that's easily 77. So True North is 1.1, and then they have another deposits, another 300,000, which should grow in size. So combine about 1.5. I'm looking for that second deposit here. Where are you? True North. I think I have to scroll down. Here it is. Ogama Rockand, 300,000 ounces at 8 grams. And this is probably going to grow 500,000 ounces, especially with lower cutoff rates. It's high grade. So they're going to add this after this will be their second mine. Plus they're finding more True North. They're finding more gold at True North as well. So these are my notes from Beaver Creek. At Beaver Creek, it was trading like 28 million. No, 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 more than that. 28 cents, I think. Um, Under 100 million. I forget the exact market cap, but about 28 cents US, and now it's up to 70 cents. So, I mean, we can look at the chart. Let's go US. We can see what it was trading at it when, so September, I think right here, 25 cents US. And now it's at so it's tripled in value, um, and came back down to 60 cents. Now I think that might be the floor here, and now I think it'll they do the PEA next year. I think it'll go to $1, and I think it's going to end up going to $10. So a market cap of 263. Let's see what the market cap is here. 210 million. So if they're a 70,000 ounce producer, I don't think they're going to have to dilute very much more than this 296, maybe 10%, which is kind of nothing because they don't have to raise 30 million. They don't have any debt. They could do 20 million cash, 10 million equity, which is kind of nothing. So having the 1.5 million, I think that's going to grow. So I actually think with their exploration potential, I think they can get to 120. Um, Maybe that's aggressive, but between those two, right now, I think they have 100,000. Um, and I think it's going to grow from there. That's why I put the 120. So at 120, I have them as a 20 bagger. So at coming out of Beaver Creek, I thought it was one of the stronger 25 baggers, but it was actually printing about a 50 bagger. Um, Now we're gonna have to wait for them to expand that production. But even at 70,000 ounces, um, it looks like probably a 10 bagger at higher gold prices. So if we just value them um, as 70,000 ounce producer, $5,000 gold, 2,500. Let's go ahead and just let's see. We'll take this to 330 and we'll run that. So we get a 10 bagger. I think it's going to do a little better. My exit price is $10. So I think it's going to get to 10. So this is with no growth. This 15, I think is a good number. I think they'll even do better than that if we have high margins. But I think we're going to $5,500 gold. And so we go to 5,500, we take this cost up to 2,700. So let's say 2000. That's probably pretty aggressive. 27. We'll go 26. I could probably even take this up 17. So with just gold goes to 5,500 and this multiple goes up, you're looking at here's my 10, my 13 bagger and my exit price. So this is my expectation. So this stock has real strong upside. Um, Really no red flags that I can really find. I say it needs cash. They don't need very much. Very little dilution. Higher gold prices, not really. Um, they're going to do a PEA, but those are kind of the red flags, but nothing significant. This needs to be removed. I don't think they need. I'm going to take that off. I don't think they need um, that. So trying to see, where are the red flags on this? Um, Possible ramp up problems, but at $4,000 gold, I think they'll be fine. Um, this risk reward on this stock looks really fantastic, but look where it was, $39 million. Now it's at 209. Um, should have been buying this stock at 25 cents US, even lower. You could have bought it at 16 cents in June in March of last year. You could buy that at 16 cents. It was totally mispriced. People were ignoring this thing. So we can go look at the company presentation. Well, before we do that, I always like to look at the press releases. So this best efforts life offering got denied, and the reason why is because they came out after they did this. This was back in August, I think, and when they announced it, and then they did a news release here in October of these drill holes, and the regulators didn't like it. They didn't like the fact that they released drill results when this wasn't closed yet. And so they did the drill results and they got it denied. Well, they decided that they were going to appeal it. So they're going to raise 13 million. And this was before the share price exploded. So this was back when the share price in September, well, that might have been afterwards, but still the share price is higher now than on September 19th. So if we look at this, so they announced it right here when it was at 39 cents US, and today it's at 70. So I asked Sean, the CEO, I said, why don't you just, resubmit it at, 70 cents US? And he said that they appealed it because of the shareholders. So the shareholders kind of got rug pulled by them announcing those drill results. So they decided to appeal it for the shareholders so that because the shareholders did the financing way down here, at 38 cents or less. Because usually when they do these things, they do them below the market. So that's the reason why they're appealing. But I'm hoping that the appeal doesn't go through, and then they'll do the financing at 70 cents. So they'd have to really do half the dilution, potentially. Um, so they're doing drilling, but they're excited about the exploration potential at True North. They have a couple zones that definitely are going to add some ounces. Maybe on this presentation, we will see some of these zones that they're drilling. Corporate presentation. That's better. So you can see 30, fully permitted at 1,300 tons per day, rapidly expandable to 2,250, very low cost to expand it to 2,250, which is what they're going to end up doing. And I think 2,250 takes them to 120,000 ounces. So the true north, I believe, is 1.1. Yeah, true north is 1.1, and then we have that gamma one that's another 300,000 ounces. So we have strong insiders with Eric Sprott at 17, another 16 for another high net worth. We have a strategic at 10. So retail's only 30%, which is basically they're not going to sell this project. Um, so they have 15 million in cash. So even though that financing didn't go through, it was no big deal. They could wait. They didn't need the cash. You can see it's a big property, a lot of drill targets, 61,000 hectares. Once they get into production, they'll be able to drill a lot. It's in Manitoba, which is a good place to mine. Here's these drill targets that I was talking about. You can see these arrows where they're open and they're open underneath, like underneath these some of these zones down here, but they're basically just drilling underneath, which I like. They're not trying to find something new. It's a lot easier to find gold where gold currently exists. So we have these drill targets up here at the top, zero point 0.8 meters at 33 grams, zero point 0.5 at 13 grams. So we have some right in here. These red arrows, I mean red stars, excuse me, where they're finding more gold underneath. I know there's underneath this Cartwright zone. I know they're down here. There's more, but this whole area right in here has a gap. This gives it another angle. You can see where they're going to under here and here and here where they're going to find more gold. So like I said, they have 1.1 already, which is plenty of gold for 10 years, and they're going to find more. This is a very good mine, I believe, especially at these gold prices. So they had problems when, back when gold was 1,300, 1,400, $1,500 gold, but now we're at $4,000 gold. You can see those circles right here where they think they're going to find gold. Um, More targets. And so we have true north here, and then we have down here. I think this is where they have that $500,000, 500,000 ounce deposit. Yeah, here it is down here. This is the Rockland. This is where they have the 300,000, and up here is the true north. So we got to go. They'll just drive it over. You can see there's a lot of targets on this property. So the historic resource 337, and they've actually produced it at 11 grams. But 337, I mean, that's say 30,000 ounces for 10 years. It's a lot of gold. So here's their plan. So they're going to do a PFS. They're going to do some test mining, which is going to generate, I think, like 45 million in revenue. Um, and then they're going to do a PFS, and then they're going to restart the mine in 27, H1, maybe Q1 or 27. This is a good shot here. We have a shot. We have these shafts A, C, and D. So they have these different shafts that they can where they can mine. They can also drill in these areas as well. Okay, that's true north. The other one that we're going to do today is Osgold. Osgold, I believe, um, has taken off. Before I do the Osgold, I like to. This is a good habit for you. I like to kind of rate these companies. So this is a developer. I like to rate them, but I also like to look for red flags. So developer checklist, we want them to have all six of these. So the first one is a strong project. I'd rate this probably as an eight, solid eight. 10-year mine life, strong economics. Some people would say it's narrow, you know, difficult. I think I still think it's a solid eight. High upside, probably a nine. I think the upside, it's a 200 million, but um, let's call it 8.5 on the upside. It was a nine at Beaver Creek, but we'll go 8.5. Good location, I would say a nine. Strong management. This is probably their biggest weakness. Um, they do have experience, good team, but I wouldn't put it as an eight. I'll say 7.5. Path to production, that's got to be a nine all day. I mean, it's close to being a 10. Um, the only reason why it's not a 10 is they do have to raise a little bit of money for that CapEx, but strong path to production. It's fully permitted. They have a mill. They got to refurbish it, but really strong. And then really strong insiders is a nine again. So overall, 8.5, but they check all the boxes. So you want to get into you do want to go through these six and and developer and kind of rate it and you want to find eights or better. 7.5 is kind of a iffy and seven's a pass. So you want I would say a minimum of 7.5, but you want eights and better. If you find eights, then go for it. But some 7.5s, you kind of can gamble on them. Okay, now we're going to do Osgold. Osgold is a Western Australian development play. Looks like it jumped in value. I have it as a 2.5 here. So they've jumped 238. I think this is a 3 million ounce project. 3 million ounces, 1.1 gram, the Contantian project. Big property, 1.2 million acres, 75-mile strike. So it's going to grow. It's at 3 million and it's going to grow in size. They have a DFS completed. Um, CapEx of 238, which is affordable for 140,000 a year. So I think they're okay. So they're building a plant. ASIC is $1,500 a year for the first 3 years. Um, it will generate a lot of cash. So they're drilling aggressively. They also have lithium. So balance sheet. Um, 60 million cash, no debt, 35% insiders. So I have them at almost 4 million ounces, 140,000 a year, about a $1,600 ASIC. Let's go down to the bottom. So actually, I have it as a 2.5, but it's printed as a 5 bagger, which is good. So, but I think this is a project that could grow in size. Before we do the presentation, we'll go ahead and bring up the tool and just see. They're definitely going to dilute. So um, we do CapEx. I'm thinking 10% is 44. 1, 2, 3, 1, 2, 3. Um, so 44, 120, 150, go 600. We'll go 600. And we'll take this to 15. We'll leave it 140. And so we had CapEx about 1,500. So say it goes 1,600, 2,400. I'll go a little higher. And we'll bump this up to $5,500 gold. I'd be using $5,500 gold, but it's hard to update my website. So this is showing almost a 20 bagger at 1,500. So we'll take this dilution up to 700 million. And it's showing a 15 bagger at 140,000 at 2,400. So we take this at 2,500. And it's showing 15 bagger at 2,500. So that's an ASIC of about 1,900. Say 19, yeah, 1,900 ASIC. They should easily be able to hit this number, hit that number, 15. So this definitely, I'm going to update. My Osgold is wrong. I'm on the wrong company. Osgold. That tool has been very useful to understand where I put this. Um, I am going to make it back to, I'm not going to put a top 25, but I'm going to make it a top pick, and I'm going to change that to a 3. And I'm going to take this, I'm going to take it up. I want to 6, 8, make that a 6. Let's refresh this. So now it's at 800, which I think that's better. Okay, let's go and look at the presentation. It's amazing how cheap these companies are. Quality companies that are not getting valued. So there's 423. This is showing 25 million Aussie. That's about what I have. Dundee 11, Jupiter 13 management. So they got 24, 26. Doesn't look like, it looks like their insiders are pretty strong there. So here's their project. You can see it's looks like a pretty big property. It is a big property, 1 million acres. Like a tanning project. MPV is 1.3 billion Aussie, so about $1 billion at $4,300 Aussie, $3,000 gold. So it's over a billion MPV. CapEx 355 Aussie. It's a little high. Initial production targeting 27, which isn't that far out. The grade stays level for about 4 years, then it starts to go down. Typical where they you mine the high grade first. This is a very big property. I expect that production level of 140. It's like about 135, 140, maybe 140. 1.25 million ounces of mineral reserves. IRR is pretty high, over 50%. That's good. Makes it easier for them to finance the CapEx. Here they're comparing their project to some of their competitors. You can see several deposits, a lot of exploration potential. See if they give us a Gantt chart. They've been expanding their land holdings. They've been hitting some pretty good drill holes. Look at the 16 meters at 19 grams. That's outstanding. 26 meters at 6.6, 20 at 7.6. Those are really good holes, big holes. You can see where it's open at depth here. Looks like they're going to start out open pit, but then they're going to expand it to underground. Regional targets. They put a big circle. They want to swallow some of these other projects up. Looks like they have growth in mind. I like that. You never know who your winners are going to be. So projects like this, they start off as a 10 bagger, then they do an acquisition and they're a 20 bagger, do another acquisition, they're a 30 bagger. Growth through regional exploration. They're looking, looking, looking. Here's our Gantt chart. So they want to make a construction decision in Q2. Nice. That FID, that means that the FID is the construction decision. Um, Financing decision, I forget what FID stands for, but it's basically a construction decision. So they're thinking this thing's going to be permitted in Q2 of next year, and they're going to have a construction decision. So that means this thing could start construction next year. That's very advanced. On track to be Australia's next mid-tier producer. So um, we can do the rating, see if it's a 7.5. I'm pretty sure it is. Good resources, checklist. Strong project. I would say 8. I think that thing's going to grow to, it's currently 3 million. Economic. Um, CapEx is all right. Everything's good. It's an 8. High upside potential, 8. Good location, 9. Strong management team. I like this management team. Are they an 8? Probably not. 7.5. It's hard to find an 8 management team on development projects. Path to production, 8. And strong insiders, 8. So it's an 8. So this project's an 8 all day long. So that's what we're looking for. So that's your video of the week. We'll end it there.